In today's Trade of the Day video, we're going to be trading the mini Dow. And as you can see, the market started to rally nicely and we're having a small micro pullback on those red bars. I've dropped in an auto trailing stop. This is a QOCO order. Q stands for quick. So it's a quick drop QOCO order with auto trailing stop capabilities. And as the market starts to rally above that red bar, we get long with a single contract. Now I'm going in with a single contract with my mouse hovering over the top of the buy market button. If that market continues to rally, I'll add a second contract on and we'll go long with two positions at this point. As you can see, the market's starting to get a little tired. I thought it was going to break a little bit better than this, which is why I only go in with a single contract on the initial break. I want to make sure that the market moves in my favor and I don't want to take a big risk. Now, as the market starts to pull back, it gives us another opportunity to drop in a second order on the break above that next green bar. As that market breaks above that second green bar, we automatically add in a second contract. You can see that I have OCOs, and so I have my limit orders out there. I'm dragging my first limit order in to my target of 33,800. That's an even number. Markets like to move between even numbers. I changed my mind and decided I'm going to drag that one down and put it on a break above the previous high and just take a quick scalp off of that thing if it goes up and breaks that previous high. The market's starting to be a little tired and lazy at this point. It didn't break out quite the way I wanted it to. I have my stop orders in there. As you can see, we're just trailing one price bar back and we're looking for this market to continue to rally. If it doesn't, if it breaks down and comes down and creates a new low, we'll just get out and wait for another opportunity. But this is a pattern that we're looking for where we have a higher high and then a lower high and then another higher high in anticipation of a break. So now we're looking for this market to break above that previous green bar, and that'll be another signal for entry. And you can see I'm putting my limit order up in there. As I stretch that in there, I put it in there just above the high bar, and I put a stop order in there as well. This is called castling. It's a strategy I like to do where if that market takes off and breaks above that green bar, we'll get in and then immediately take the profits off. So it's taking half of our profits off, but we're staying in with two contracts. Still have two contracts long, and we now have two positions in the market, and we took off half our profits. So that's how that works. We took one off and put another one back in. And so now as this market starts to rally, we're going to go ahead and continue to hold this position as we're looking for it to break above that double top we've got in there now. We still have our two contracts long. We have one limit order set up there at 33,800, which is our target zone for a single contract. I'm going to go ahead and cancel that one as well. Again, it'll take some of my profits off the table rather than the whole profit. And so as the market starts to move up, it just almost went up there and touched that number, and then it started to pull back a little bit. So we're having to be a little bit patient here, waiting for that market to push higher. We are looking for a full ABCD pattern, looking for this market to break above the 33,800. You can see at this point we're up $175, looking for this market to continue to rally. And there it goes. It's getting ready to go up and break that higher high. It takes out our stop, takes out our limit, so it puts us in with one, takes it right back off, so we take our profits along the way, and I again call that castling. And then as the market went up and hit that 33,800 level, that was our breaking point, and that was our profit taking level, and we ended up with $325 on that trade.